Good morning. Welcome to this session. We're going to look at how the trade had been and how to progress from where we are. Trade and price will move in a way that it is designated or that it will move. And eventually, why we are in it, and its dynamism is such that you would continue to guess and second guess yourself that is this what I'm looking at? Is this what I'm seeing? But most importantly, it involves discipline, you understanding the structure that is you are looking at. Eventually, after it has formed, it will make a sense. But while it's going on, it's like it's not making any sense to you. Or that, oh, this is what you thought the price would do, and the price will not do that. Now, looking at structures, looking at waves and all of that, anything can be wave 1, it can be wave 2, and it can be wave 3. Anything can be 4 or 5 to you. But after the price is done, it will always make sense. It is not that you are reading sense out of it, but it will always make sense because, for instance, nobody told you that wave 4 must always be 0.38 or 38 retracement, 38.4% retracement. What you were told is that when you bring out your retracement tools, it could actually be 1.23 or 1.23. It could be, that's in terms of retracement, it could be 1.23 is same thing as 0.123. It could be 0.24. It could be 0.38. So we know that it could be any of the three. Because it could be any of the three, it makes it difficult for you. The only thing you can be certain of is that once it touches 40 and breaks 40, it can never be a wave 4. That is what you must have at the back of your mind. So the only thing we leverage on is what has the price created before wave 4. So in case you are saying that, okay, this is my wave 4, okay, am I able to identify a wave 1 and wave 2? If you're able to identify a wave 1 and wave 2, then you try to draw and look for your retracement. But once it breaks wave 4, then you know that the limit of wave 4, then it's not wave 4. Or probably you are doing something else. Again, one thing I've told us to do is to make use of trend lines. I taught us how you make use of trend line within a wave 1, supposedly wave 1. And when you've had your wave 1 and wave 2, I've told you how to use your trend line. That when you are using your trend line between 1 and 2, if it is trending, it shouldn't break that trend line. If the price begins to push beyond wave 2 and is forming wave 3, I told us again, you must be able to identify the wave 1 of 3 and a wave 2 of 3. And you draw your trend line on wave 1 and wave 2 of 3. Now, your price should keep to the limit of what that new trend line, which is the third trend line, you know, is giving you, which is with 3-1 and 3-2, trend line is giving you. Once you breach that trend line, that signifies the end of wave 3 to you. So you now can begin to now look for a major 4 and a 5. So in case you are counting and you are second guessing yourself, the use of your trend line on this fractional wave or structure would always also guide and help you to know that, okay, once I have a breakout of this trend line, tells me that most likely I'm done with wave 3. Most likely I'm done with wave 3. So I have to look for, okay, if the wave is now coming, it shouldn't break the limit of a major 4. Of course, the wave would have done a wave 4 of 3 within the 3 itself to finish a 5 within the 5. So at the end of the day, what we are trying to do is trying to look at the fib relationship of waves that is unfolding in terms of 1, 2, 3, 4, 5. We're also trying to look at how the trend lines is helping us to guide our counting. Then the third thing is also how to now begin to look at the RSI, how RSI is guiding us also to tell us that, okay, this is most likely what is happening. So the wave count, the structure of what we know 1 and 2 to 3 to 4 to 5 should be, the structure of the flat corrections, what it should be. These are structures. We must know and have a good grasp of them. Then use our trend line. Then use our fib relationship or fib agreement that all these things should have. Use our RSI. These are things that we have to use, and we have to always, keep to it. I discovered at times that the kind of price action is not all that important, except if it's at those fib levels that you expect something to give. You look at those fib levels in terms of the structure, then you now look at what price action am I having at those levels. So if you now see price action at those levels, then, and there is a break of structure, because that is one thing you must always look for, a break of structure. At any count that you are doing, you must always look out for a break of structure. Any time frame, because when you are doing a micro correction or a mini corrections, you are looking at a fractional structure. Then the trend line must be first broken, or rather, I would say that the structure must be first broken, then you look for structure break, then you look for a trend line break. So the structure break and the trend line break, these are things that would, signify that, okay, we are actually at the end, we are doing something else. And when that happens, you don't follow your price because you have a structure break or a trend line break. Then you have to wait for price to do correction. Then you now begin to calculate your correction and where it's going to get to before you come in. Now, this is where discipline again comes in. When you have done your analysis and you think you are correct, then you must be able to give yourself a tight stop loss based on your analysis that price should not do more than this. This is where, I expect a reaction. In case you are waiting for price, in case you are that busy that you can't actually be checking price from time to time. So all you can do is, okay, I with my analysis, it should be here. And your stop loss in that case should not be more than 10 to 15 pips. In case you lose it, then you won't be dragged into too much negative. When you are dragged into too much negative, and you are leaving your trade to go on, you are gambling. You're not only gambling, you now turn to a spiritual person, trying to pray that I hope this thing is going to turn, it's going to turn, it's going to do this. Then you're now hoping that it's going to do this. Why don't you probably have looked into the price or your structure and say, okay, oh, this is the most likely thing that is going to happen. So we look at structures in alternatives, that what if it's not this, it's going to be this, or it's going to be this, in three alternatives. So when you do that, you already have a good knowledge of what price could do. The first option of price, the second and the third option of price, that will still agree with whatever structure that you are looking at and what could happen. So that means you have the edge over the price when you understand that. So when it does not tick the first one, maybe it will tick the second one. You are looking at those levels at which something is going to change. When it changes, then it changes. It's nothing. When your analysis go wrong or price does not go along your analysis, then it is wrong. So you are losing a few pips. So we don't work with the mood or emotion. Emotion does not come into Forex at all. You work with what you know, the information that you have at your disposal. Now, you are saying something that on Euro USD, we have been bullish. But in the last one month, it's been bearish. Then such is what happens when you jump in at the wrong spot. You might be waiting for a month for trade to probably go your way. At times you might wait for 2 months, at times you might wait for 3 months. Then you are distraught, you are actually frustrated because you thought Shebi is an uptrend or Shebi is a downtrend. Why is it that, okay, it's going to take eternity for it to resume the trend? And that is the power of knowledge. So, and one has to continue to develop himself or herself until you get, the knowledge at every point of turning. This is what price is going to do. So we're going to look at DXY. DXY is going to give us a good understanding of what is going to happen in other currencies. And so we need to look at this chart. Now, when you look at Euro USD itself, it's not exactly, because it's supposed to be an inverse replica of DXY, but you don't get to see that most of the time. There could be slight changes, but DXY would help. When Euro USD is breaking tops or breaking bottom, and you look at spikes, you won't get that with DXY. But if you are emotional and what you see is movement and we're watching movement, then it doesn't really help you. And you also understand the reason why I said, why can't you stick to an instrument? Understand this instrument instead of jumping from one instrument to the other instrument, and you have 3 instruments. You've not even had enough of one instrument. You're now doing 3 instruments, so you are multiplying or triple. You are making your risk triple, and it's money we are talking about, and it's not naira, it's dollar. So you are just burning and wasting. If something does not go my way, I don't lose more than two or $4. I don't lose more than that before I even if it goes against me, then I'll look at the structure and I'll try to look for, okay, can I get an exit here? So we'll learn better. Now let's look at DXY. What we believe is that dollar is falling. That is what we believe, even though it rallied in the last 1 month. What we believe is that dollar is falling. And if it's falling, and if these are giving us a perfect 1 A, B, C of 2, to have the third wave, and which this is part of the third wave up to this level, and to have, the fourth and the fifth wave that we say. That was what we said, that within the third wave itself, this looks like the end of 3, and this may be 4, and this may be 5. We thought of that being a 3, 4, and a 5. Then later, we had this thought again that this would actually be a 3 of 3, a 4 of 3, and a 5 of 3. And that what we are seeing now is fourth wave and a truncation of the fifth wave. We talked about all of that. Now, on the daily time frame, what is RSI telling us? Bringing the RSI out here. If we look at the RSI here, at this point, this is where we have the 3. And it's kind of, forming together that the low here coincide with the low here, and which tells me it's still part of 3. That is what you will see on the daily. The first run of wave 3 here, and this more or less like an ending structure of a 3 to be a 3-3, and this spike up here is a 3-4, and this one is a 3-5. So wave 3 at any given point in time will always be the lowest of the structure. So if it's 3-3 or a 3-5, it will always form like that, as if they're on the same low on the RSI. But in terms of pips, there could be like 100 or 200 pips locked in between them, and which we must understand. So for me, this 3-5 seems to be wave 3, part of wave 3, and not the end of the wave 3 here and wave 4 or wave 5. So I still see this, I still hold that view strongly, that this is part of a 3 up to this moment to finish a 3-5. And I still hold that view that this is wave 4 here, and I still hold that view that this is wave 5 that has end in truncation here. So we can see that the low of 3 here and the low of wave 5 here is still a divergence if you look at it. So it's still a divergence. It is still obvious that we might be dealing with a 3-5, a 4, and a 5 that ends in truncation. Now, when you look at other people talking, other platforms, probably if you are following some groups and all of that, they will tell you this is probably a 5, a 3-5, that a fourth wave, and the last wave, which is a 5. They will tell you that. But again, one thing that should guide us to know that, because we have not picked the second wave of this wave, because when you run this wave, and we're just finished 4 and 5 here, we've not done a second wave to me. So which means that this may just be the second wave, wave 2, that is going to be a wave 2 to this one, because we have run a cycle here, 3, 4, 5 to up to this point finished a cycle to me, a cycle of 1 or a cycle of big A. And we are now in the process of doing a 2, which means that whatever we are going to see, dollar will still continue to gain strength for some time. The only thing that will tell me that it is a very bearish run on the DXY, which will be a wicked bullish run on the Euro USD, is when the wave that is coming here broke a retracement to the downside more than 61.8. The limit of this wave should not be more than 61.8, because dollar is losing strength. So it's just trying to make up and to cash up to probably in the middle here before going back down. So what I would expect, because the way these had gone up as a bullish run on a DXY, what I would expect now, because we said we are due for correction, so we are going to correct this. And where we should expect a turnaround, we've not reached that limit. And that is one thing. So seeing this bullish move here, you should see it more or less as a correction, because it's appearing on the daily candle time frame. So it's appearing that we are correcting. So that is what I'm saying here now for now. So we are to come down. So this is, at this point, the candle here suggests a deep correction. So, and that we are correcting price at this high. So we're going to correct price, and we're going to see that we should be having an ABC correction minimum here. And it should not go from here to here, a retracement of 38.3. Max that I would expect is 50. If price should do more than 50, then it could mean that these, which I'm still not buying now for now, it means that this will now be the first wave. It will now mean that this is a 2. This will be now, it will now mean that this is the first wave here, wave 1 and wave 2, 3-1 and a 3-2, and we are running 3-3 to the downside to break below on the DXY. If it's Euro USD to break above. But I don't see that. I don't believe that for now. I don't, because it's not making any fib agreement to this entire wave. I have not seen anything that looks like 2. And if it's going to be a cycle, I can believe that it has finished a cycle from what I just explained to us, a 3, 4, 5. That is perfectly, looks like a cycle that has finished in this time frame. It has finished that cycle. So I should, of course, I shouldn't get rigid, but what is making sense with my knowledge is that this is A of the entire correction of this run. This is wave A, we're going to have a wave B, and we're going to do a C. And so if we should do a C, once we at least hit 50 retracement of this entire move, then we should see it as being completed to have been a wave 1 or A and a B, or a wave 2. Then we're doing a wave C to go more down, or to do a wave 3. So that is what we should see. But then when we get to 50, we should be looking also for the structure. We look at our structure, if it's making sense, if it is completed or not. So that is what will just guide us, if the structure is completed or not. Now, without saying too much, let's now begin to look at what we are likely going to be seeing in the coming week. So we are focusing on this wave now. So we are done with this as a 3, 5, a 3, a 4, and a 5. So let's bring out our trend. We are focusing on this part now. So let's bring out our instrument. Now, looking at this instrument now, we are seeing a breakout of this structure now. The structure first broke the trend line, which is the trend support here on the DXY. Now, at this level, this is the last structure that was created by this wave. And this is the structure break on the black. That's the structure break on the black. So because it's a structure break on the black, now this can only be an ABC correction or a change of a trend. But I'm focusing that this is an A, and we're going to see a B and a C to go further up. That is what, I'm building myself to take. So here now, we'll see a wave 1 and a wave 2 and a wave 3 and a wave 4, which agrees with it. And at the end here, it's a wave 5 at this point. A wave 5 at that point. That's where it ends. Now, somebody could have asked me, because we just had a break out of here, can this one be a 4? The fourth wave that is coming to do a 5 in truncation, and now begin to turn down. If this one is going to be a fourth of this entire run here, if it's going to be a fourth, and we are going to now, what will make it a fourth wave is that it's going to agree with the fib arrangement of here to be a fourth wave. I mean, it shouldn't break 38 or 40. That's the first thing that you will see. Because if you say, oh, maybe these are just finished the entire wave 3 here to break out, and this is a fourth wave, yes, you may think like that. But again, you must know that where is the 2? This is the 2. This is the 2. This is the first wave, this is the 2 here. So if this one is going to be a fourth wave, then it shouldn't break 40. And if price now, if this is fourth wave and it is now going on a major fifth wave here, then we are telling ourselves that it should either kiss the bottom or go turn backwards at or turn down at about 1.61 extension. So now, price at the moment, looking at this, because the entire run here, this is 38 and this is 50 and this is 61.8, 76.4 of the entire run from here. So a retracement. So if you take it from 2 now, if you take it from 2 here and say, okay, we are having a retracement, this is where it should be. So price will not just stall in the middle and not make a fourth wave because it has broken days and days. It should at least kiss 38.2 before making a turn back, so which it didn't do. So that tells me we are not doing a fourth wave, a fifth wave to the upside. We are most likely seeing an ABC correction. We are most likely seeing an ABC correction. So that's my thought here. So if you look at the 4-hour time frame, let's go in there and look at 4-hour time frame. Now, looking at the 4-hour time frame now. Anybody that is reading a price action, see, this is where you get your price action confused, because you would have seen this one as what? A morning star. So if it's a morning star, then we are going bullish to break up and we are going up. So price action again does not tell you what exactly is happening, because a morning star and evening star, because this could have been a configuration of a morning star, and the price is going to go up and up and up and up. And this is an evening star. Let me use the word evening star. But what I can see here, you can see a wave 1 and a wave 2 clearly on this time frame on the 4-hour to now finish a wave 5. Now, when you look at this one on this time frame, and I can't see a wave 1 and wave 2, which means that this is a minor regarding when you relate this movement to this one. This is a minor. This bullish run is a minor. On this time frame, I can see 1, 2, and a 3 probably a 4 and a 5. But on this time frame, I can't see a 1 and a 2, a 3 or 4, 5. But I can tell you that this is almost completed. Now, when you are now to step down, if it's after you now step down, that you now see the internal structure of this more, it tells you that this is minor to this, or a cursor to this movement. So I won't see it as it's going up. Now, if I bring my instrument again out, we are seeing a break of structure. A break of structure will not just happen for anything. So if it's a break of structure that will say, okay, this is like the 4th wave because we've had a 3 and a 3-4 here, and we are finishing a 5. So even if we tell ourselves, maybe this is just a 3-5, and this is a 4th wave, and we're going to have a 5th wave, then what we should now do is that if this is 3-5, then we should look at bringing out our instrument again, coming to 2 here, that blue, take it to the end here, and this is 40 here, and this is 38 here. We can still give it that, okay, the price is making a U-turn for now at 38, okay? If it's making a U-turn at 38, then we might still probably hold that view that maybe we are doing the 5th wave, or which is the last leg. It's not impossible, but I'm not holding that view because of the correction, and we are doing correction inside correction. I'm not holding that view. And if that is what we are pitching to ourselves, so we're trying to say now that price would probably not go beyond from here to here. The only time I will believe that this is possible, that the price will now come up here, the only time I will believe that is if price should break the top again. If price should break that top again, that is when I will now believe that is when I will now believe that that is what we are doing. I will now believe that this is a 4th wave, a major 4 and major 5, then we are turning down. And if we now turn down in that case, it's going to be a very big ABC before we turn up again. So in our attempt to look for what is happening here, we have to begin to look what is this thought now is not popular. It's not popular. But I would rather see an ABC correction here first before going down based on the internal structure of this wave that we have completed. And this is an ending structure here. And this is a new wave. And the fact that this new wave came down, you know, in a very impulsive manner does not make this one a 4. Well, I will still say that it does not make it a 4. Why? This is quite impulsive to the downside. And if it's a 4, that should have seen an ABC correction to get to this point to now say this one going up is a 5. This is not an ABC correction. This is a 5-wave movement to the downside. I think you understand now that this is not an ABC here. So this might make an ABC, this one going up, so to turn more downward. That is what I can see. So this one will not just be, oh, a 4th wave, and I'm thinking I'm going up. Even the internal structure here does not tell me that this is a 4th wave, that we are done with this wave for now. We are doing an ABC correction, and we are turning more to the downside on the DXY. So that's how to look at structure. You look at structure of what we are seeing, okay, we are thinking is the 4th wave. The structure does not suggest that this one is a 4th wave. This is impulsive. This is impulsive. If you go to 1 hour, Now, looking at it on the 1 hour, it's impulsive. This is impulsive. This is impulsive. If you look at this, what makes this one impulsive is that when you have the first run and you have the second run, and you now try to get the third run, and the field extension of the first and second one run to get to the third one is over 161.8. It is impulsive. It is not corrective. So it is impulsive at that. So let's look at it. And these are basic things that you must understand before you now begin to confuse yourself. It's only when people are bereft of ideas or knowledge, that is when you now begin to think, oh, maybe this is what is playing out. So that's an extension. So this is 161.8. It broke 161.8 to the downside. This is not corrective. So it's not fall. Even if we are looking at the higher time frame, and you think, oh, it's at 38 point of the higher time frame of that, maybe the 4 hourly or the daily, and you think it's fall. This is not fall. It is not fall. I can say that it's not fall. But this is a new wave, and it's going to probably be an ABC correction. Now, in case you are thinking that this will continue, this is quite impulsive, and it's going to continue and continue to go. You see, what I can see from here, even at this time frame, that this one had made itself clearly a 1 and a 2, 3 and a 4 and a 5, because this is a 3, this is a 4 and a 5. Again, do you believe that this is a 3 and this is a 4 and this is a 5? Do you believe that? Let's look at RSI. Now, this is an RSI. So, as a 3, so you can see the low here that agrees with that 3. And look at the 5 here. The 5 at this point, it's in a divergence. So for us, is a 3, a 4, and a 5 in a divergence, a clear divergence here. And you can see it's not kissing the low and it's going up. So which means that this wave is completed, okay? So we can see this as a 1 and a 2 and a 3, a 4, a 5. So in this case, a 4 does not even, from the 2, let's look at the 2. It doesn't even reach 0.23. Oh, I picked the wrong instrument now. Weekend like this is more of we are training ourselves again. Yeah, 3. So it's barely 0.146, yeah, which is the first, where we expect the retracement here. So we look at all those fib relationship before we do stuff. So this is the 5th wave, and it has finished this wave. And this wave, I can tell you, is also finished. So what it's looking like to me is like we're going to have a double zigzag inside a double zigzag. We're going to have a zigzag inside a zigzag. That is what, information I can get from here, which means that we are seeing this move as A of the zigzag. We are now correcting this A move here. We are probably going to correct it as a zigzag, which means that this wave B may be a zigzag, because the first part of wave B has also run in 5 waves. So the second wave might just be a 3 wave, which is the B of B to the upside, probably deep enough. And we might have the last wave, which will end, in a truncation. So, but we need to see what is happening here. I believe that we are almost at the end of this one. This might just be where it will end here. Now, let's look at the 30-minute time frame, because we have to be very careful in dealing with this. Now, looking at the 30-minute time frame now, so we can now see the internal structure of this wave clearly, as this went up here as a wave 1 and a wave 2, and this also had gone beyond 161.8, or almost at 161.8. Let's look at the fib relationship. This is 1. the beginning to 1 and to 2. So here, this is 161.8 at this level, which had been broken. So this also had broken 161.8, which means that it is not corrective within itself, is a motive wave, and which will still agree with a zigzag. So it's not an ABC flat correction. So this is more, a flat correction will not break 161.8. So it's a motive wave in itself. So they might choose to do this to confuse people, and you think because we have been so bullish on DXY, so we are resuming the bullish move and we're going to continue to go. But when you look at the way the structure gets clear, it's more clear here on the lower time frame, on the higher time frame. It's only when we got to the lower time frame that we could see the inside of this one. That's another thing that tells you this one is a student. Let me use the one, a student to this master. So let me use that word, a student to this master. But for now, this is a 1 and a 2, and probably a 3, and this may be a 4, just like we saw here. This may be a 4. This might just be the last move of a 5th wave. If you look at RSI on this time frame, because that is what we had, so we might just be, this might just be the 3, the 3rd wave here at this point. So we will see this one almost crossing the RSI on 30 minutes time frame. But again, you must wait for it to burn itself. You must wait for it to burn itself. And they might drag and drag and drag because the trend line set for it to break is this, which is here. If anybody wants to be a bit aggressive, maybe if you pick a sell from here, which is if it's on the Euro USD, so that would be a buy. So a buy between here and here might just be at 61.8 here of this entire correction. Of this entire correction. So a 61.8 retracement here might just be the point that you might want to buy your Euro USD. So if you go to Euro USD, which what I've said now, a Euro USD, with what I've said, let's go to Euro USD. So, which is still the same here. We've had a 1 and a 2, and a 3-1, a 3-2, and a 3-3, a 3-3, a 3-4, and a 5. So to end A. So in this, of course, we see a 1, a 2, a 3. So probably this is a 4, probably this is a 5. This level is a 61.8. So in case we get a reaction here, this might just be where we get the first reaction for B. And if we get a first reaction for B, that might just be an A of B. It might just do another leg to the upside, which might just be, a flat in the middle to now finish the last leg of B. I don't know what it's going to come to, but I think if one is able to pick a low here, you should just begin to look for a buy if we get a reaction here. And in case we now go up again and break the trend to the downside again, so when you now break the trend to the downside again, you can now begin to think of a possible C leg to the downside to turn up once it does not break low. For now, if we have any intention of probably finishing the correction to the upside, we should see this one as an A of B, a B of B, and a C of B, then to turn up. A C of B will potentially still come to about 76, or 78.4 of retracement of the entire run. It could still do that, but it now depends on how deep that the B of B will go up. If you are to see that, how deep the B of B, if this is the A of B, how deep the B of B would go up. And because it's coming as a 5-wave structure, I don't expect a B of B here to also make it past 85.4. It shouldn't. If it breaks 85.4 to the outside, then that means the correction here is done and we are going up. So it won't be out of place if you pick your buy at this level of 61.8 of the entire run, or retracement of this entire run is 61.8 at this point. Maybe if you pick at about 1.06950. So if you pick a buy from here, so we'll see, and the price continue to go down, I don't expect it to break low, you know. I don't expect that. I will still expect that this would finish its correction around this level, shoot up to do a correction in the middle, throw one more leg down if it's going to do that. But if it continues to go up and break beyond 85.6, then we are going up to finish this entire run. So that's how to look at it. For now, I stop here.